Here for another coffee and a chat. I'm just out today catching up with one of my team and having some coffees, actually in a cafe, for real, out and about. So that's kind of nice. But hey, good morning. Hopefully everyone is well. While the old live stream is warming up, I'll just quickly do the intros. Welcome back to those who are coming back, returning. People like James. Morning, James. How are you, mate? Good to see you. The regulars like Alison. Morning, Alison. Great to have you back. Great to have you here again. And for those who are coming for the first time to Wealth Coffee Chats, Jason Witten's my name, as it says at the bottom of the screen, and been property investing in Australia and New Zealand over 20 years, coaching property investors over 18, and along the way, learned a few things. Helped people buy over 6,000 properties, and paid a bit of attention along the way. And each morning, morning Melinda, each morning get together with some crew and have a bit of a chat about property investing. Some of the do's and don'ts, some of the lessons, some of the pontifications about what's going on in the world of property investing in Australia and a bit in New Zealand. So welcome along. Thanks for joining us this morning, gang. Around about 8 o'clock each day. Try to do it Monday to Friday or in normal working days. So welcome along. Hey, listen, I wanted to talk to you guys about today. Some of you might have heard Sam talk about this before. Called, he has a concept, and it's probably not his. It's a concept called Apex Cities and New World Cities. I think I put that in the comments or the captions. I think I said New World. So Apex Cities and New World Cities, because it's an interesting thing. Hey, there's Roz. Hey, morning, Roz. Good to see you. Great to see you popping by. Thanks for joining us again. So Apex Cities and New World Cities in Australia, certainly we have, a number of capital cities. We would call them capital cities. And, not all cities are created equal. And when we look at the makeup of our cities, the economic strength and power of those cities are interesting to analyze, and the pricing of those cities are interesting to analyze. If you look at the property market right now, where you look at the two apex cities in Australia, the two massive cities that we have in the country. Good morning, Nikhil. Good morning, James. There's another James there, James Murray. If we look at our two massive cities in Australia, one is obviously Sydney. The other one is Melbourne, and those cities are the powerhouses of our country. They've got the most population, close enough to 5 million. I think it's 5 million for Sydney, and Melbourne's not far behind. They're economically, significantly, dominant in the country, and the pricing in those cities, is significantly higher than the other cities. And so when you're building your property portfolio, and the point is this, when you're building your property portfolio, part of the positive strategies and teachings and keeping ourselves safe and also exposed to different markets is the idea of diversifying across markets, different markets in Australia as we go. And we believe the idea of at least having one of those apex cities in your portfolio, Melbourne or Sydney, as a stable part of your portfolio is super important. And the challenge is and has been that most investors have been priced out of Sydney. And it's an interesting thing because, call it 10 years ago, after the GFC, 2011, 2012, 2013, we were investing in Sydney, we had a significant amount of opportunities in Sydney that were priced really well. The rents were excellent, and we were going for it as investors because for myself and Sam, we knew that Sydney was and will always be a dominant economic player in Australia. And, for you and me as a property investor, having a bit of Sydney in our portfolios, is something that's super important. So now, if you have a look at Sydney, you're not going to get much in Sydney for 650, 700. It's out of your price range. It's out of making sense. Its yield, its rental return is low. So it doesn't make a lot of sense for you as a property investor to invest in Sydney anymore. And, that's a bit of a challenge because Sydney's always going to be an economic powerhouse in Australia. So just yesterday I was chatting to one of my very good friends, and he's a client also, and he had a friend had $1 million looking for a house, and he went 57 kilometers from Sydney to buy a 25-year-old house with $1 million, and it was an old red brick shitter. That's crazy, huh? Crazy times. So you're priced out of Sydney, and you want to make sure you build your property portfolio in an effective way, in a strong way. You want to have some exposure to an apex city. Well, gang, Melbourne is that apex city that's still, for the moment, affordable for you and me as an investor. Okay, it's for the moment. It won't be for long. You give Melbourne another decade, and Melbourne will be like Sydney. It will be unaffordable sooner, maybe even 5 years for most investors. And then you get limited, then you get pushed out into these other choices. So when you think about it now, okay, Canberra. Canberra's the most expensive. Place in Australia right now. The rents are high. We were investing in Canberra 3 or 4 years ago. We thought it was fantastic. Boom, killed it. Sydney's crazy. The rental yields are low. The prices are high. Melbourne, prices are actually very good in comparison to the size of the city and its economic power. Rental yields are a bit low. That is because we've got some leftover issues from COVID. I still think it's worth investing in Melbourne because of its apex nature, its powerful nature as a city. And then what do you got? What choices have you got? You've got Adelaide, you've got Hobart, you've got Brisbane, you've got Perth, maybe Gold Coast, Sunshine Coast, Newcastle. You're starting to get fringy, okay? And then, it's interesting when you think about that. So for me, don't be priced out of another apex city in Australia is probably my point of the conversation this morning, because Melbourne, I think, is in the last sort of 2 to 5 year run of it being still affordable. I don't know if anyone's seen this one here. I don't know if you can read that. Melbourne apartment building falls off a cliff. They've been listening to my my podcasts and my morning live videos. Listen, the construction pipeline is just a disaster in Melbourne, in Sydney, in Brisbane. Those 3 cities are going to come under huge amounts of pressure. And when there's pressure, economic pressure, price pressure, what happens is the prices go up. Interest rates have gone down, and there's not a lot of pressure on putting the rents up, gang. And I might talk about that, about what's happened right now in this this world of interest rates have gone down. So the rents have stayed flat for almost a decade. There hasn't been a lot of rent growth. I got something here the other day. No, I'll grab that out. I'll show you guys another day about that. But because the interest rates have gone down so much, people's buying power or borrowing power, certainly owner occupiers, their ability to pay 30% more because the cost of interest has gone down, but their wages haven't grown. So that's what's pushing some of the prices right now as well. And our rents aren't under pressure because interest rates are so low. So it's an interesting dynamic. But my point of my conversation this morning, gang, because I'm getting a little bit distracted in my head going, oh, I might talk about that, but I won't, is don't miss the opportunity to invest in an apex city. We're at Melbourne right now, where we were 10 years ago in Sydney. And you'll miss out on the opportunity to own some in Melbourne if you don't do it in the next 1 to 3 years, I reckon. Maybe, yeah, that's what I think. And the prices won't make sense and the rents won't make sense as we go along. But anyway, hopefully that made sense. Apex cities, Sydney and Melbourne. Get a piece of them. Sydney, most people can't afford that right now. Either the price or the yield is rubbish. Melbourne, the price is still good. The yield is okay. So I would say to those investors right now who haven't considered Melbourne, now is the time to get a piece of that action down there, because the construction and the pipeline of new properties has plummeted. People are selling their second-hand properties. People are sitting on them. Why would you sell when the market's booming? There's no reason to sell. There's no pressure on interest rates. There's no pressure on, things. You just keep your properties. So the number of listings has dropped 60%. Auction rates are high. That market is feeling the pressure and upward pressure in prices. So there you go. Anyway, hopefully that makes sense, gang. Coffee and a chat done. Good to see you guys on today. Thanks for joining me. I'll sign out. Adios. Done and dusted. Join me tomorrow for another coffee and a chat. As always, chuck in the chat here if there's something you want me to talk about, something you've heard, something you want me to have a little bit of an opinion on or a bit of feedback on. Always happy to do that. And there you go. All right, gang. Thanks. Good to chat to you. And chat again soon. Cheers, gang.